So every time I get paid, I set aside some money in my brokerage account, and once a month, I take the money that has accumulated and buy some stocks. So I'm about to release my new stocks I'm going to buy in July, a few days before I do. Before we get into it, please take a minute and click subscribe to my channel if you don't already. And please check out the link you see on your screen for a message from my sponsor, The Motley Fool. It's the best way to support the work that I'm doing, and you can get the top 10 stocks to buy right now. So, as mentioned, I only buy stocks once a month. It makes it kind of easier to keep track of what I'm doing in the market and make more meaningful purchases instead of just doing it here and there, and to avoid compliance issues. I can't buy stocks a certain amount of days before or after I talk about them, so it just makes it easier to plan my purchases accordingly. In July, I'm not buying any new stock positions, but I am adding significantly to five of my existing positions. So let's get into them in no particular order here. The first one is a company called EPR Properties, ticker symbols EPR. I've kind of been on hold with this one for the past few months, and for a good reason. One of its biggest tenants, Regal Entertainment, has been going through bankruptcy proceedings. And I'm happy to say it was just resolved in a pretty favorable way for EPR. I'm going to do a separate video about that. And this is a REIT that pays a 7% yield in monthly installments and has a great balance sheet, great growth potential, and now its biggest headache has been resolved. So I'm finally going to add a little bit more to that position. Number two is Brookfield Corp. I've added significantly this year. This is a new position for me in 2023. I've added significantly to that a few times, and I plan to build that position a little bit. So that's one I'm adding to this month. I believe Brookfield is highly undervalued since it spun off part of Brookfield Asset Management. I think a lot of investors just don't understand the structure of the business. A lot think a recession is going to hurt the business more than it actually will. And just to kind of validate my opinion on the stock, since that spinoff, company insiders have bought over $100 million in shares for themselves. So this is one that I think is a very undervalued play and one that I think has a lot of potential to be a long-term winner in my portfolio. Number three is Disney. This is probably the beaten down value play that I like right now. I think its theme parks have never been busier. It's executing tremendously in them, and it's planning to invest heavily. If it can successfully figure out how to expand its theme park division, especially in its Walt Disney World Resort, where it plans to invest a lot of money, I think there's a ton to be made. Those theme parks are just cash machines. A lot of investors are pessimistic for a couple reasons, mostly streaming. Um, Disney hasn't figured out how to make a profit on Disney Plus yet, which is not a good thing. But I'm giving Bob Iger time to figure out the streaming strategy. He just recently took over CEO again. And with the theater recovery continuing, kind of like a counterpart to my EPR investment, EPR's number one property type is theaters. I think box office revenue is going to continue to grow for a few more years as we get back to normal. So Disney is a stock that's trading for well under half of its high, and it's one that I've added to a few times this year, and I'm planning to do that again in July. Number four, one that I haven't added to in some time, but now I feel comfortable doing so again. Walker and Dunlop, ticker symbol WD. You might have seen a few headlines about a coming real estate crisis because all of this debt is maturing. That might be true in certain types of real estate, like offices in particular. But Walker and Dunlop specializes in multifamily properties, which are actually holding their value pretty well. The rental market is very strong. Rent continues to rise, and multifamily properties primarily derive their value from their ability to generate rental income. So there is about $300 billion of multifamily debt that's set to mature over the next 3 calendar years. I see that as an opportunity for Walker and Dunlop, regardless of what you think for the entire real estate industry. I think the opportunity to refinance that much debt is a big a potential upside for Walker and Dunlop. And there are a lot of little areas that they've expanded into recently, such as property appraisals, small balance loans to property investors like me, and investment banking, which they got into through acquisition, and the progress has been pretty impressive so far. I think they have a long way to go. It's still a small cap company, great history of producing returns for investors, and I don't think that's going to change over the long run. And number five, MercadoLibre. I love it when my stocks fall, and I don't know why. And this is kind of the case here. MercadoLibre is already one of my biggest stock investments. It's down 15% from its recent highs, despite no real company specific news to justify the move, other than maybe recession fears and interest rates affecting it. It's got tons of potential to grow, not only in its e commerce platform, but in its payment platform and its logistics platform, in lending. And it's still producing strong growth momentum despite the economic climate, which shows that this is a business that really has a lot of room to grow. So those are the five stocks I'm buying in June. I'd love to hear your thoughts on them. Please leave me any comments. I'll do my best to answer all of them individually. Once again, thank you so much for joining me. Be sure to click subscribe if you don't subscribe to my channel already. And as always, this video is sponsored by the Motley Fool. Be sure to visit www.fool.com/Frankel to receive the top 10 best stocks to buy now.